now we're saying that nickel is going to be in short supply because the lithium ion battery, primarily the 80% plus nickel content, lead batteries are going to consume more nickel than the world has to offer. So you can see that the price of the cells, it basically has declined to $137 a kilowatt hour at the end of 2020. And everybody thought it's going to go down, down, down. And the key thing to look at here is the fact that the internal combustion engine auto has a $100 a kilowatt hour as their energy cost. So you can see 137 is getting close, but it's still $37 or 37% above the ICE kWh. The only thing that's gone below $100, because I heard some comments before that the battery cost is under $100. The only thing that's under $100 is lithium iron phosphate, and I don't think it's going any lower.
It's also because of the size of less liquid futures market. It's still one that's usable, but it's less liquid, and that makes speculation or increases speculator impact, if you will, in the market. Nickel's a challenging market for those businesses managing price risk. Those are the industrial businesses either trying to manage the flow through as they convert nickel into a downstream product. It's producers, and then it's consumers who just have to consume nickel and in whatever form they're consuming it in, and not really able to pass along prices in a fluid fashion. So prices move in big increments and on low volumes. Now, in our experience, when we work in the nickel market, because what my team does is work to help build price risk management in industries across the board, and nickel consumers and users is one of them, is that the control of nickel pricing and the way nickel pricing is applied is less orderly than you'll see in, say, an aluminum or copper or zinc market or industry. And we've even, we've seen a wide variety of approaches that you don't see elsewhere either. Some businesses actually leave themselves completely open to the nickel price. And we've actually talked to several companies that do that on purpose, and some even admit that they almost go out of business every 6 to 8 years and are just waiting for that to happen.
In the long run, or not even long run, the next 3 to 5 years, our company is going to really be, primarily driven by nickel in, nickel out for these new batteries, and also enable us to continue to expand production, whether it's here in North America or Europe or Asia, for the production of high value products for this sector. And so we see that recycling is a good pathway to fill that gap that's projected in supply, but also provide more sustainable sources and local sources of products like nickel sulfate. When we complete this hub that we're building in Rochester, New York, we'll be producing several thousands of tons, not like primary production, but for recycling plant, very large scale, and one of the largest scale, I would say, nickel sulfate producers and cobalt sulfate producers in North America. But that's just a starting point for us because of that, increased ramp of production of batteries. And then when we get to the end of the decade, increased need for recycling batteries coming off the road. And we get asked the question also, is it better to recycle or reuse those batteries? But given this demand for the raw materials, we see that recycling is becoming a more clear path for a lot of the OEMs in order to bring the material back into their supply chain. And
Well, I think one of the big problems, and I suggested it, and it fell on deaf ears, is the reason for the volatility. And again, I say you have three markets. You have stainless steel nickel, which is 60 some percent. You have the upcoming lithium ion battery, which is nickel sulfate, but not exactly, because the Chinese are using the MHP from Ramu and they're sending it to China, and they're bypassing the nickel sulfate process, and they're going direct to a ternary cathode. So my point is, if LME had a contract for stainless steel nickel, let's call it ferronickel with a discount for NPI, and then they had a contract for, let's use nickel sulfate with a discount for the other ones, then you're separating the three markets that the speculators and the hedgers can use LME nickel, and the people in the stainless business can use ferronickel price, and the people in the EV battery business can use the nickel sulfate price, and they're not all in bundled into one, and you can't separate the wheat from the chaff.
Yeah, and I've worked for years in the years past extensively with the LME. And it is an interesting idea. I know that just about every market, people say, hey, I want the LME contract to be more specific to my particular product. But I think, Robin, you did raise a few interesting points about why speculators are there. And I think to make any market work, unfortunately, because liquidity is important, you have to have some degree of speculator or investor in the market, because somebody always has to be the opposite side. And when the market wisdom is that the market's going to go up, somebody needs to be there to sell because they don't believe it or whatever. The issue is, though, we aren't looking at just one kind of speculator anymore. We're looking at lots of different types. And I think, unfortunately, while John, you may be right, because you got different markets, and certainly battery is going to be very different from stainless steel. If you did do those contracts, they would still come in there. Matter of fact, the LME is really orienting themselves to make it much more possible for everybody to participate in the markets, which includes very much the financial community, the speculator investor types. And so I think you certainly could separate the contracts, but you're not going to get out of the speculation.